Hi students, good morning. In cost accounting 1, today we are going to discuss in detail about cost classifications. According to, there are 8 classifications of costing. What are the elements, functions, variability, controllability, relationship, expenditure, normality, and finally managerial decisions. Okay, let's learn in detail one by one. First one is cost classifications according to elements. If you take a water bottle, what are the things we need to make a water bottle? We need plastic, then machines, then workers, and finally electricity. Okay, so such these 4 things, these 4 costs are divided into 3 elements. What are they? That is material cost, labor cost, and expenses. Okay, so let's take first one is material cost. What is meant by material cost? The cost is spent for material to make a product, that is called material cost. So material cost are classified into 2 parts. What are they? That is a direct material, and second one is indirect material. What is meant by direct material? The cost is spent directly to make a product, that is called material cost. Say for example, if you take wood, when you purchase if you purchase a wood, for what purpose? For making a furniture like chairs, tables, a dining table, doors and windows. Okay, so these are the things we making from what? Wood. So the wood is the direct material cost. Okay, so what is meant by indirect material cost? So indirect material cost is a supporting cost to making a product. To make a product, it's a indirect cost. Material cost means a supporting cost. Say for example, if you make a furniture from wood, if you make a furniture like table, chair, doors and windows, cot, dining table, etc., etc., from the wood only you make this kind of a furniture. Okay, so in this kind of furniture, you to make, we need a supporting material. What are the supporting material? To make a furniture like chair, you need a nail. Okay, and you need a rod to cut into a different parts from the wood. Okay, then we need a glue to paste 2 parts in 2 different parts into one. Okay, to joint into different part into one, we need a glue and a sandy pepper and a varnishing oil, varnishing paint. Okay, then what is screw, bolt and nut. Okay, these are the materials we collectively called as supporting material. That supporting material, when you buy from the shop, with this material, this supporting material only, you can make the finished chair. Without the supporting material, you cannot make the finished chairs from the wood. Okay, so that supporting material to make a product, we buy that supporting material, that is called as indirect expenses, indirect cost. Okay, let's come to second one is labor cost. So what is meant by labor cost? Labor cost is nothing but when you pay the wages to the labor, when you pay the salary to workers, that is called a labor cost. Labor cost are classified into 2 parts, that is direct labor and indirect labor. What is meant by direct labor? A person who works to make a product directly, to those person is called as what? Direct labor. Say for example, carpenter. Let's take the same wood. From the wood, making the different kinds of furniture, so sofa, cot, doors and windows. Okay, so we need that technical person, carpenter. We need a carpenter to make the different kinds of furniture. That carpenter is called as direct labor. Okay, so to make a product. Okay, what is meant by indirect labor? Indirect labor means assistant, helper. Okay, to assist with the carpenter, the person who assists with the carpenter, who helps the carpenter to make the product. Okay, without assistant, a carpenter cannot do all the things. Okay, to make a cutting, cot, to make doors and windows, we need an assistant, helper with the carpenter. Okay, so those person is called as what? Indirect labor cost. To pay wages to those person. assistant, to paid wages to the assistant work with the carpenter. Okay, so helper assist with the electrician. So you need to pay that assistant too. That is called to make a product. That is called as those person is called as indirect labor cost. Okay, to paid wages to those person we called as a indirect labor cost. Okay, understood? Then come to expenses. Okay, the expenses is more than that of the material cost and the labor cost. Okay, so that the expenses helps the people to run smoothly. So these three cost, material cost, labor cost, and the expenses we collectively called as elements. Okay, got it? Okay, let's come to the next topic, that is cost classifications according to functions. Okay, how many functions here we are going to learn? 4 functions. What are the? Production cost, administrative cost, selling cost, and a distribution cost. Okay, let's take the production cost. The production cost means what? To spend money to produce a product directly, like direct expenses, direct material cost, direct labor cost, expenses directly. These are called, we collectively called as a production cost. Let's take the textile company. Okay, in a textile company, when you issuing cloths, issuing cotton is called as a material cost, direct material cost, and stitching a tailor to give you a salary to the tailor is a direct labor cost. Okay, and pay factory rent and electricity expenses we called as what? Expenses. These all together we called as what? Production cost. Okay, let's come to administration cost. Administration cost means nothing but when you spend money to managing the business and the offices, to pay salary to the office workers, to pay rent to the office for office. Okay, then telephone charges and what is stationery expenses we called as what? Administrative cost. Okay, say for example, if you take a school office, in a school office you have to pay principal salary for to the principal, and the office staff salary, office rent. You need to pay the cost for office rent and the telephone charges and the stationaries and that computer internet connections, internet charges we called as what? Administrative cost. Okay, let's come to selling cost. What is meant by selling cost? Selling cost is nothing but when you if you spend cost, when you spend money for promotion and selling the product, that is called selling cost. Okay, say for example, for advertisement you need to pay the cost for the advertisement and selling commissions. Then marketing expenses we called as what? Selling cost. Okay, say for example, if you take the that mobile phone company. Okay, if you launch a mobile phone company, you need to give TV advertisement. Okay, you need to pay the selling persons. Okay, and then you uses the social media marketing. These collectively called as a selling cost. Okay, then come to distribution cost. What is meant by distribution cost? Distribution cost is the delivery of the goods. Okay, delivery cost. Okay, say for example, pack the product cost, packing cost, transportation cost, delivery charges, and warehousing charges. Okay, say for example, these are collectively called as that distribution cost. Say for example, if you take a milk product, you need to carefully packing that milk product and loaded into a van and distributed it to the shop. This collectively called as what? A distribution cost. Okay, let's come to the next cost, that is cost classifications according to variability. There are 3 kinds of variability: fixed cost, variable cost, and the semi-variable cost. What is meant by fixed cost? Fixed cost is a remain constant, directly irrelevant, irrespective of a level of production. It does not changes, it increases or decreases of output in certain up to a certain limits. It is a time related and must incurred even if the production is 0. I will explain you with a simple example. If you run a factory, any factory or biscuit factory, chocolate factory or a cool drinks factory, okay, you need to pay the rent, say for example 50,000 rupees, you need to pay the rent for the factory, okay. Whether if you produce as a 100 units or 10,000 units or 1,000 units or 5,000 units, even 0 units without producing any units, even though same remain that rent you need to pay is remaining same in constant, that is called as what? Fixed cost, okay. So there is no any changes, the fixed cost remains constant, okay. Whenever you produce in different units, one month you can produce 1,000 units, in another month you cannot produce anything, 0 units. In next month you can produce in 5,000 units, okay. Whatever units you produce or need not produce, the rent pay, how to pay 50,000 rent is remains constant, that is called a fixed cost, okay. Let's come to the next topic, variable cost. Variable cost is nothing but that cost changes directly proportional to the directly proportional to level of production, okay. It does not if the variable cost changes, output, if the variable cost increases, output decreases, okay. If the variable cost is a constant in cost unit, but the total variable will be changed finally. If say for example, if you run the bakery business, okay, so if we need flour, we will be using the flour to producing a bread, okay, right. So if you are making a more if your production increases, if your production of bread increases, you require more flour, okay. If the production decreases, your requirement of the raw material like raw sugar, that means flour, sugars also decreases, that is called variable cost, okay. Let's come to the next, semi-variable cost. What is meant by semi-variable cost? Semi-variable cost means both fixed cost and variable cost. It remains fixed up to certain limits, okay. So with variable output, okay, so it partly changes with the production activity. Say for example, let's take a telephone bill. So in monthly telephone, minimum charges of the monthly telephone is fixed. When charges increases, when more calls will be increases. When you made more calls, that extra charges will be increased. Got the point? Let's take them, say for example, for the semi-variable cost, let's take for example for the telephone bill, okay. If the telephone bill's minimum monthly charges is fixed, there is a fixed monthly charges in telephone, minimum monthly charges is fixed in telephone bill. But the extra charges increases when we using more calls, okay. The extra charges also increased, okay, according to your usage of the calls, okay. Let's come to the next cost classifications according to controllability. The controllability are classified into two classifications. What are the controllable cost and the uncontrollable cost? Let's come to controllable cost. What is meant by controllable cost? Controllable cost is nothing but that these costs can be controlled by them, controlled and influenced by the managers of a particular specific management, okay. These costs can be increased or decreased based on the management decisions and the efficiency, okay. Let's take for example in production manager. Let's take for example in production managers can decide to reduce the wastage of the raw material in a factory, okay. So he will be reducing the cost of the raw material like flour and reduce the cost of the sugar, Okay, so what happens automatically? What is the result? Automatically, the wastage of raw material will be reduced, controlled. Say, I will explain you with a clear example. Let's take the bakery business. Okay, in a bakery business, in a product manager of a bakery business, he decided to control the wastage of the raw material in a bakery. So he decided to control the productions like raw material like flour, sugar, and cocoa powder cost. So as a result, automatically the wastage of the raw material will be controlled. Okay, that is called controllable cost. Okay, let's come to the uncontrollable cost. What is meant by uncontrollable cost? Uncontrollable cost. These costs cannot be controlled or influenced by the factory manager. These costs can be measured or determined from outside external factors or higher level of management decisions. Okay, so a factory managers responsible to only reporting the cost, not control the cost. Okay, so say for example, if you take a factory, biscuit factory, the rent of the factory is fixed by the owner of the building, right? It cannot be controlled by the factory manager. Got it? Okay, let's come to the next topic, that is cost classifications according to relationship. That the relationships are classified into two costs, that is a direct cost and the indirect cost. Let's take the direct cost. Okay, what is meant by direct cost? When you spend money or cost directly to make a product. Okay, so identified directly. The product is identified directly or traced to trace the specific product or job, that is called the direct cost. They decided to they have a direct relationship with direct cost means a direct relationship with cost of the unit and vary with the productions. These costs can be easily measurable, and these direct cost to form a major part in the production cost. Okay, let's say for example, let's take the bakery business. Okay, in a bakery, you use when you use the flour for making water bread. Okay, so here with the flour, purchasing the flour is the direct cost. So because it is directly used for making the bread, the flour is a direct cost, because that with that flour only you can making a bread, that is called, that flour is the direct cost. Got it? Let's come to the indirect cost. Indirect cost means it is not directly tracked by the specific product or cost. Okay, so the indirect cost is, other name of the indirect cost is overheads. The other name of indirect cost is a common cost. What is meant by common cost? Common cost include many activities. Okay, let's take for example, in a bakery, use electricity used for lighting in entire shop. Okay, it is called as indirect cost. Why you say the electricity charge using is indirect cost? Because it is not specifically linking with a particular product, only one product. If you use the lighting, if you use the electricity to lighting in entire shop, in entire room only, in entire hall, got it? Entire hall, you can use the many activities that you can do many activities in one hall. You can do many activities in entire shop, buying, selling. Okay, whatever many costs, many activities you are doing in using that electricity, using that one light. So it is that electricity you cannot linking with one specific particular product or job, that is called as indirect cost. Okay, got it? Let's come to the next topic, that is cost classifications according to expenditure. if you take expenditure, there are two classifications. What are they? Capital expenditure and revenue expenditure. Okay, let's take the capital expenditure. What is meant by capital expenditure? When you spend money, okay, when you spend money for buying or improving the fixed assets, that is called as capital expenditure. It gives benefits for long term. Say for example, purchasing building plant and machinery, land and building. Okay, so these are example for the capital expenditure. Okay, it gives benefits for long term. Okay, it improves the fixed assets. Okay, let's come to next one expenditure, that is revenue expenditure. What is meant by revenue expenditure? Revenue expenditure is if you spend money, if you spend cost for daily business operation, you need to daily spend a cost for running a business operations smoothly. That is called as revenue expenditure. It gives benefits for within a short time. Within a short time, it gives the benefits. Say for example, wages, rent, electricity, etc. Okay. Okay. Next, come to the next topic, that is cost classifications according to normality. Normality are classified into two types, that is normal cost and abnormal cost. Let's take the normal cost. What is meant by normal cost? Normal cost is the cost usually occurs during the regular business operations. Okay, and it is expected under business conditions, under working conditions. Okay, under working conditions, and it includes in the production cost. Say for example, for the normal cost is a normal losses of the raw materials during the production is the example for the normal cost. Let's come to abnormal cost. What is meant by abnormal cost? Abnormal cost is nothing but it's this cost cannot usually occurs during the regular business operations. It is unexpected, it raises unexpected, unusual, it is a unusual cost due to say for example accidents, okay, and inefficiency work as abnormal losses occurs. Okay, it cannot be included in we cannot include it that abnormal cost with the production cost under or profit and loss account. Got it? So, what is the example for the abnormal loss? Fire, due to fire, the abnormal losses occurs. Okay, let's come to last topic is cost classifications according to managerial decisions. Under managerial decisions are classified into three cost. What are they? Relevant cost, irrelevant cost, and opportunity cost. Okay, let's see one by one. Okay, first we take the relevant cost. Okay.